First, the International Monetary Fund says that although the global economy has improved, there are new challenges that threaten the world. In its Global Financial Stability Report, the IMF says Europe's banking system and a sharp slowdown in China could derail the recovery. Joining us in the newsroom, CCTV's Tracy Tandon covering our top story. Trace?
That's right, Phil. The IMF warns that the Eurozone's creaking banking system poses as a serious threat to global financial stability. Now, Europe is still in the process of repairing its banking sector and really strengthening its balance sheets as the region continues to deal with all the debt overhang. The IMF does suggest that the Eurozone needs to really speed up plans to support the weaker banks across the region and also create a banking union. But Phil, it's not just the IMF that's pushing Europe to accelerate its plans, the World Bank as well. I had an exclusive interview with World Bank Managing Director Sri Mulyani, who says that the Eurozone is not quite in the clear as yet.
The recovery, especially on the banking sector, is going to take time. Cleaning up the balance sheet, strengthening it, and then they will start lending. So that is something that we see from many other countries, ASEAN financial crisis, in this case, Russia in the past, or even in this case on Latin America. So we see that pattern. That's why it's very important for the effort to improve and strengthening the financial system in Europe is a homework that needs to be done.
Now, we can't talk about Europe without talking about Russia and its aggressive moves towards Ukraine. So far, the spillover effects surrounding all the developments in Ukraine have been limited, but Sri Mulyani says they are still geopolitical risks which are very much present.
It is adding to the risk of the fragile recovery of the global economic projection, although we see that developed countries, especially U.S., even Europe, as I mentioned, that they are going to emerge in a positive territory on the growth projection, is actually showing a very encouraging improvement on their growth performance. The Ukraine-Russia situation is adding to the risk. Definitely for two countries, they are facing with this risk directly. The Ukraine projection on the growth is going to be downgraded from +3% into -3%, and for Russia from above 3% into only above 1%.
One of the big topics that was covered here during the World Bank IMF meetings today was whether or not the United States can truly make a smooth exit from its unconventional policies, or in other words, a smoother tapering process. Ever since the Federal Reserve began tapering its bond buying program, there have been knock-on effects on emerging economies. There's been a flight of investor capital from emerging nations. I like to call it the flight of fear, as well as we've seen a drop in currencies across those respective economies. I asked Sri Mulyani what these emerging economies can really do to perhaps soften that taper blow.
Well, first, in terms of the direction and the communication has been at least much better. So the direction of this tapering and the pace of this tapering has been communicated quite clearly. So in the way that help in the rationalizing what is exactly the nature of this adjustment to what you call it the new normal. For many developing countries, especially emerging countries, which is much open, they see that reaction, which is a little bit more in a very volatile last summer, last year. But I think they are now looking at this adjustment which is going to happen.
I think the message has been clear from both the World Bank and the IMF, and that is the U.S. as well as the Federal Reserve really need to get their monetary policy right. Now, that could be in terms of timing, execution, but most importantly, communication. Also, another message is that emerging economies really need to fight the good fight. They need to improve resilience, implement the right policies so they can put in place the right buffers that can truly withstand all those external shocks and eventually manage all those financial risks. Phil?
Trace, thank you very much covering the World Bank IMF spring meetings for us.